Cool. I think maybe we can kick off and people can trickle in over the next few minutes or so. 'Cause we have a decent amount of attendees on already. So, hi everyone. Firstly, thanks very much for joining us today. Really appreciate you taking the time on a Wednesday afternoon. So we'll be sure to do our best to make it worth your while. We've got a very exciting presentation today, focusing on key developments over the first half of the year, how the market performed generally, how our portfolio fared, how our investment strategies played out, and ultimately what we were able to deliver to our investors. So please do drop your questions into the chat if you've got any. We've got some people on in the background that'll do their best to answer them as we go. And of course, we'll leave plenty of time at the end so we can cover any that may have been missed. So I'm David Harte. I'm the Director of Company Operations here at Stake, and my role revolves heavily around building the processes and systems that sort of take us from point A to Z throughout the property lifecycle, with the ultimate goal of providing you guys, the investors, the best investment opportunities and maximizing the performance of those properties that you have. So before we dive into the portfolio performance for the first half of the year, we'll maybe start with some quick context about how the wider Dubai market has performed, and maybe I'll hand over to Amanda to go through that part and perhaps introduce herself too.
Hi, my name is Amanda. I am the senior acquisitions at Stake. So my role in support with David is to acquire the property that goes onto your portal. So what we're going to be talking about is we're just going to run through the Q1 results, what's been happening, where we're at, what the funding process is, the new locations, investment strategies, as well as the dividends that we've been seeing. So I just want to start off with a quick snapshot of how the Dubai market has been. We've got three separate tabs: residential, offices, and hotels. For residentials, our Q2 2025 summary is that we've had over 550,000 units that have come online with a 90% occupancy. As you can see, it's similar, that mirrors to office space occupancy. This is showing us that a lot of people who are coming to the country, as we know, Love in Dubai everywhere is posting that we're having 1,000 residences coming to Dubai every single day. What we're finding is that we have a mirror, a correlation between the residences and the people that are having occupancies for offices. So out of those 1,000, quite a lot of them are coming and they are staying to work in the country, which is very, very good for the units that are coming online. It supports that. As you can see, the average daily rate for hotels is at 620 from January to May of this year, which is really, really good. On average, you want to be sitting between 600 to 800, depending on the time of the year. So for considering that we were going into summer, we had Ramadan, these are good figures. For Q2, there was 153,000 hotel keys that had been handed out for it with an 82.9% occupancy. Again, really, really good for Dubai because you've got the pickup of other areas such as Abu Dhabi, Ras Al Khaimah, and Fujairah that are picking up in popularity too. On the next slide, we're going to be talking about the Dubai residential supply. So at the moment, we have 4,000 villas that have been completed year to date. We have 13,000 completed apartments. In total, we're going to be having 68,000 in the year 2025. This will be supporting the amount of people that are coming in per day. Because we have so many people still relocating to Dubai, still finding Dubai as an appealing option for them to start up their businesses, to relocate their families. All that Dubai is doing is supplying the market with the property that is needed. Over the course of the 5 years, we're on track to have over 200,000 properties come. This will further support us in our 2040 master plan, which I'll touch base on in later slides. But in the next slide, what I want to talk about is specifically the residential villas and apartments. So to break this down further. From January 2021, we've had a 4.7% increase quarter on quarter for residential capital value. So this is the value of the property. So 4.7% quarter on quarter. For villas, they've had a 6% increase, and for apartments, a healthy 3.4%. This is all from January 2021. Really good outlets. The reason that villas have been increasingly in quarter on quarter was because from then until now, there was a lower supply of villas that were on the market to apartments. Now, what we're finding is that more villas are starting to come on as communities are starting to have, and apartments haven't dipped in popularity. On the next slide, I'm going to go into the Dubai population itself. So at the moment, we're at 3.9 million people. Our 2040 master plan is going, we're aiming for 5.5. We have had a growth of 140,000 people since 2024. 90% of our occupancy are expats, people relocating to Dubai, and our growth has been 500,000 since 2020, which is since COVID. Pretty impressive numbers for a country. That's actually insane because 3.9 million is similar to my hometown of Melbourne. And to think about the growth of this country, it's quite impressive. On the next slide, what I'm going to be talking about is in particular, the types of people that are relocating to Dubai. So as you can see in 2025, 142,000 millionaires were relocating worldwide, and the UAE, is leading as the top destination. So high net worth individuals migrations for the 2024 forecast was UAE at the highest, then USA, Saudi Arabia, Italy, and Switzerland. Obviously, our tax-free initiatives are very, very low, 9% tax on corporate companies have all led towards this, as well as the fact that our pricing market is still in the orange compared to other countries which are in the red in terms of purchasing. For high net worth individuals, migration outflows. So these are the countries in which a lot of people are leaving as millionaires. The top is the UK. Recently in 2024, I believe it would possibly be because of the fact that they started increasing the taxes that people would be paying for their companies. You also have China, India, France, and Spain. We've always had a high migrational outflow of UK, Chinese, and Indian and French, but it is quite interesting to see that we have had a pickup of Spanish internationals coming to Dubai as well. So then on the next slide, I've got the continuing of the Dubai real estate market boom. So this in particular, we're talking about off-plan activity. For H1 2025, we have had a 23% year-on-year increase in residential transaction sales. Total value of sales has been 262 billion, which is a 38% year-on-year increase. Very impressive. Now, out of that, our off-plan transactions have gone up 19%. So out of the 262 billion, 102 billion of that has been off-plan sales. Quite even with ready sales. So our ready sales have gone up by 11%. Our value is 41.9 billion. Off-plan shares in all deals has been 69% in May 2025. So what we're seeing here is that majority of the sales that are occurring are off-plan. There still hasn't been a lot of residential that have come onto the market. There's still a lower supply for ready than what there is for off-plan, which is what is driving the off-plan boom. When you don't have as many options on the market, you're more driven towards off-plan. But because it's off-plan, they're not able to get those yields that we're by renting it out as soon as possible. In terms of the luxury off-plan market, 81% of luxury sales for year on date has been 15.1 billion. Key things to note is that Dubai, the reason that Dubai is still appealing to people is because it has a 0% income tax. It's got a liberal visa option for expats. As we know, 90% of people that are occupying Dubai at the moment are expats. And the non-oil sectors now account for over 70% of the UAE's economic GDP. including real estate, which is one of the highest ones. Investors prefer a flexible payment terms, the easy pricing, and the strong capital appreciation potential that has been fueling that demand for the off-plan units. Sorry. So now what I want to talk about specifically is the 2040 master plan. So this is where we're going in the future and why these numbers are looking healthy still. So on the next slide, so as I mentioned before, we're aiming towards a 5.8 million population increase by the year 2040. We were at the time we were expecting at the moment for us to have a 3.3 million occupancy, but it's actually increased as you saw in the previous slide. Now, when we look at the urban hub areas, these are 5 areas that within 15 minutes of themselves are going to be a self-sustaining city. So for us in acquisitions as well as stake itself, when we're looking at properties, we're looking at them in close to those radiuses. Because if we're purchasing anything within 15 minutes of those new cities, those urban hub centers, we are going to benefit from what those cities are providing in terms of the healthcare, the educational facilities. These 5 major hub areas are going to be Marina and JBR as one area. This is a solidified, solid area that they are increasing and ramping up and modernizing to make it appealing for tourism. The second one is the downtown vicinity, which includes Business Bay, City Walk, DIFC. So this is going to be the city center and the financial hub for businesses. I'm sure you've also noticed that in Business Bay, a lot more premium options have been coming up by top quality designers, top quality brands, and top quality real estate developers. Similar has been happening in City Walk as well as in DIFC to cater to this urban plan. You then have the new and upcoming water area, which is Mina Rashid, Port Lemaire, Port Rashid, and Dubai Island. So this is the old and new side of Dira. That's going to provide you an additional waterfront option compared to Marina and JBR. Your 4th area is going to be Dubai Silicon Oasis, which is currently on track to be one of the leading areas for the Dubai GDP in terms of cities. That's going to be focusing on healthcare, tech, a lot of SIM setups, and as well as Bitcoin. So this is more of our tech side of Dubai. Going along the Ella Lane, anything that's along that strip is going to find an appreciation of value along with it. And then the 5th urban hub area is Dubai South. As you've probably noticed in the market recently, there's been a lot of discussion about Dubai South. We're starting to find a few more luxury options that are coming there. A lot of developers such as Imar and that are coming in with off-plan areas as well, adding on more communities to support the villa and townhouse lack of supply that's in there. Dubai South is appealing because you have the Etihad rail that's going to be connecting there. You have the new Dubai Al Maktoum airport, as well as the fact that it is directly below the Jebel Ali Palm, which, as we know previously, the Palm Jumeirah itself increased the popularity of surrounding areas and their prices. So on the next slide, what I'm going to be passing it over to David to be now discussing about the state portfolio performance in particular.
Brilliant. Thanks very much, Amanda. So for the rest of the session, I'm going to talk you through some of the key highlights from our portfolio in the first half of the year. So whether that's the growth that we've seen, the strategies and how they've been performing, and the returns that we were ultimately able to deliver to investors. Just once again, to let you know, if you do have any questions, just please feel free to drop them into the Q&A button down at the bottom, and we'll do our best to get to them. Or if you want to reach out after, please feel free to do so. So just on the next page, one thing that I wanted to highlight, and maybe this can help give a bit more context to what follows on the following pages, is the evolution of our portfolio size and the sheer speed at which it's growing. So we've now funded just over 450 properties on the platform. And in just the first half of this year, we listed and funded more than 100, raising in the process over 220 million dirham, which is pretty remarkable. During this time, we've released a bunch of new types of offerings, funded units in a matter of minutes, and further improved our internal processes so that you guys get paid faster and have even more visibility on your portfolio. So you can see from the chart on the right side of the page just how consistent and accelerated the growth has been. And at this rate, and with the pipeline that the team have got lined up, we're on track to close the year having raised just over 600 million dirham, which again is super exciting. So you might be wondering, why does this matter to you as an investor? Well, from my perspective, at least, this growth and the speed at which we've grown really shows the trust that we've built within the community that we've got here at Stake, and the strength of our acquisitions and asset management processes. So since 2021, with your help, of course, we've learned what works, and we're super focused on delivering that day in, day out. And we really couldn't have done this without the confidence you guys have all shown in us, and we're incredibly grateful for that. We want to keep providing you with the best opportunities, the best experience, and really be your partners along the way here. And the fact that we can keep growing like this quarter over quarter really shows you our ambition for the future, and that we're just getting started in this journey. So this kind of momentum is exactly why we're confident in doubling what was funded last year by the end of this year, and why you'll see some of the most exciting opportunities we've listed to date coming up in the next few months. So on the next page, I think many of you will be familiar with the investment strategies that we introduced on the platform last year. And some of you may have joined the previous webinar with Amanda, I think, on our new fix and lease strategy. But for those that are new to Stake, I'll give a quick summary. So on our platform, we now offer 5 distinct investment strategies, which are designed to suit a range of preferences and approaches. So essentially, this allows our users to more effectively and efficiently make their investment decisions, and so that they can align them with their personal priorities and goals, whatever they may be. So each property that we list on the platform, as some of you will know, will have an investment strategy attached to it based on certain set criteria. And we have 5 such strategies. So the first one, capital growth. These are properties in areas which we feel have a high likelihood of outperforming the market over time in terms of value growth. These can typically be in up and coming areas, neighborhoods with new infrastructure projects underway. Then we have high yield, which, as the name implies, are properties that offer above average rental yields. Typically above 5.8% is what we're seeing, and usually found in areas with very high rental demand and well-priced units. Balanced opportunities offer, I guess, the best of both worlds, both consistent and stable income, but in areas that are still poised for growth. So these are typically in the well-established and prime locations across Dubai, such as downtown Business Bay, Marina, and the IFC. Fix and flip, we introduced this concept last year, and the level of demand seen has truly been incredible. I'll go into a bit more detail on this on the following page, but as I think our current investors are aware and have communicated to us, this is an offering that people are just super excited to get their hands on. And then just over a month ago, we released a 5th strategy, somewhat inspired by the fix and flip offer, but also as a result of what we were seeing in the market. Fix and lease is a strategy in which we will buy a property, renovate it, and lease it with a much higher rental income. So effectively, investors get the benefit of outsized yield and also outsized capital growth potential due to the value of the renovations being added. So if you like the idea of both income and growth, this one's a bit of a sweet spot. And yeah, make sure you keep checking the app, because we've got a few great ones lined up in the coming weeks and months. I'd also love to get your feedback here, guys. If you've got sort of a favorite strategy or any particular strategy that you want us to focus more on, this sort of feedback is really what we live off. So do drop it into the comments if you can. On the next page, I'll focus a bit more on one of these strategies, which again has been a huge focus point for us over the last few months in particular, but since the end of last year in reality. So since launching Fix and Flips as a strategy, we've raised more than 100 million dirham on 12 projects. And this really is, as I mentioned earlier, only the beginning for this. Our investors have spoken and we've listened. There's clearly a demand for opportunities offering accelerated returns alongside our traditional buy and hold opportunities. And the team we have here has been incredibly hard at work sourcing and managing these projects, and now working with agents trying to achieve the highest possible sale price so that you can realize your returns. We do have some exciting updates coming on the projects currently underway. So if you're an investor in those, please keep your eyes peeled on the app. And for everyone else, we're expecting a lot more of these opportunities to be listed in the coming weeks and months again. So if you want to get involved, make sure you're ready, because these tend to get snapped up very quickly. So just on the next page, I might pass it back to Amanda.
Thanks, David. I'm just going to quickly touch base on some new locations. As David said, that with fix and lease and fix and flip, it's allowed us to go into new areas that we wouldn't normally have looked at. So at the moment, we have properties scattered across 36 of Dubai's top performing neighborhoods, and we've just added six more to it, which is quite impressive. A few of them have been on fix and flips, including Arabian Ranch as one, Dubai Water Canal, which I'll talk about in the following slide, Victory Heights, but we've had options in Dubai Production City, which we're finding is actually getting really, really good yields and popularity. As people are starting to understand more about Dubai when they move, they're starting to look at these new and upcoming areas, which we are wanting to snap up. So those new and upcoming areas that we're finding has provided a lot of popularity is Dubai Production City as well as Town Square. We actually got an option in Al Suf, which is quite unique because as some of you may know, that there are parts of Dubai that are leasehold only, and there could be particularly a strip or a building or something that has paid to be freehold that's eligible for people who are expats to buy. So we've managed to snap up one option in Al Suf and Dubai Water Canal, which is another freehold area surrounded by leaseholds. So in the next slide, I'm going to talk about Dubai Water Canal in particular. So this is my community spotlight that I just want to shed a light on. The reason being is because we've actually managed, as David mentioned, the different types of strategies in which you can invest. Dubai Water Canal, because of its uniqueness in its strategic location, the prestige of how the building looks, and the demand as more around it is popping up, has enabled us to be not only a capital growth area, which is when we started out with it. We first offered it as a capital growth because the buildings were just handing over. We didn't have any retail spaces that had come in yet. But then we found that as it came into the winter months and more people were cycling past along the routes, going across because it is on the canal and their boats, and there was more traction that was coming in the off-plan options as they all started to come online. People started to find out about it. They became more interested in it, and there became more of a demand for it. So then we were able to get a higher rent for some of these options, which moved it into a high yield. We then strategically took advantage of that, and we've done a little bit of upgrades and added some luxury features to it and put it on option as a fix and lease as well. One of our new ones that, as David mentioned, we've just launched. So this is an area that has enabled us to use it for multiple different ways. One is because it's connectivity. It's directly in between Business Bay and the Arabian Gulf. If you're someone who likes to cycle, you can very easily take a casual bike ride. I myself like to do it from Kite Beach all the way along Business Bay and into Meydan. It's got luxury villas, hotels, apartments that are all near that. You've got Mr. C's, Four Seasons, H&H, which are all there, and everything that's been launched off plan has just further driven the popularity of this ready option. Thank you.
Brilliant. Thanks, Amanda. So, as you've all come to know at Stake, our aim is to provide you guys with stable and attractive dividend distributions each and every month for our income generating properties. So in the first half of this year, we distributed almost 13 million dirham, or just over $3.5 million, which, looking back over the last few years in comparison, is really remarkable, and more than double the amount for the same period last year. So being able to distribute so much in rental income directly to you is really a testament to our team trying to acquire the most attractive properties in prime locations, and our property management team for ensuring that they're leased at the highest possible rate. So our vacancy rate remains far lower than the market average, which I think Amanda touched on earlier in the presentation. And even coming through the summer months, we still managed to pay out dividends in just around 98% of instances, which is, of course, extremely frequently. It's important to remember that while vacancy is expected in the asset class itself, and we often require a period of time between tenancies to renovate properties, with initiatives such as our dividend guarantee and our team's sort of diligent work at securing tenants, our payout ratio remains remarkably high, and is something that has helped us to build significant trust with our investors. So maybe on the next page, dividends aren't the only returns that our investors receive. When we sell a property, our investors can realize the appreciation in property value. And over the last few years, we've seen a significant increase in prices across the city and our portfolio, which again, Amanda highlighted earlier in the market side of the presentation. So for properties that we've held for more than a year, the average appreciation is between 11 and 12%, with many of these properties far exceeding this, especially those that we've held for a longer period of time. It's worth keeping in mind that many of these properties have only been held for 12 to 18 months. So to see this level of appreciation already is really super promising. And within the last year, we saw buildings appreciate by more than even 25% in just 6 months. Some of the areas at the bottom of the page are those that saw significant upticks in valuations over the last couple of years, including Dubai Hills, Marina, and Creek Harbour. And as our aim is to realize this return for you all as soon as we can, we're actively looking for sale opportunities for properties that have increased in value significantly. And of course, our investors will have then the chance to vote on any potential sales that may arise. Just on that topic, on the next page, given our focus on bringing liquidity, and I know there's been a couple of questions in the chat already on liquidity, to what is traditionally an illiquid asset class, I just wanted to point out some of the properties that we've sold since the beginning of the year. So since we started operations, we've sold over 20 properties within our portfolio, with 8 very successful exits since January. And as our portfolio matures, and we've had these properties in the portfolio for a longer period of time, we expect this number to increase dramatically over the coming months even. It's worth noting that our exits in the first half of the year achieved an average appreciation of 33%. And this is for properties that were typically held between 1.5 to 3 years, which again highlights the strong performance of this market. And with the valuations again significantly up across our entire portfolio, we're confident in delivering far more successful exits like these. And as our portfolio continues to mature, investors will be receiving a lot more opportunities to realize these gains. And then finally, on the next page, I just wanted to point out another route to liquidity, which again has come up in the questions already, which is our exit windows. So this is typically for those that want access to faster liquidity versus waiting for a full sale of the property. And while we do recommend holding for a longer period of time, we have put a lot of effort into building a system that facilitates investors who wish to sell their stakes earlier. So we open these windows twice a year, at least for now, with the most recent iteration coming in May, where there were 168 properties available and almost 13 million shares transacted between buyers and sellers. We truly understand the importance of investors having the option of an early exit. And we've made the exit window as seamless as possible from our side so that ultimately we can give you as much flexibility as possible, give you more liquidity options and more control over your investments. So I think we've come to the end or close to the end now. So maybe just on the next page, I'll give a couple of closing thoughts before we open it up for Q&A. So we're over halfway through what's already been an incredible year for Stake and for all of our investors, with super strong market conditions, new products, new markets, and a really robust pipeline of opportunities to come ahead. And I think I can maybe speak on behalf of all of us when I say that we're incredibly excited for the second half of the year already, and we'll keep doing what's been working so far. So finding the best opportunities for you, managing them as effectively as we can, and continuing to deliver strong returns for all of you. I don't want to sound like a broken record for those that have joined some of these webinars before, but I really mean it when I say that this is only the beginning of what we have in store. And we couldn't be more excited to have you guys along on the ride. So we've got some big announcement coming up over the next couple of months. So do stay tuned. Thanks very much for everyone joining. It's been a pleasure. I think the team has been answering some questions in the background, but maybe we can jump in and help out if you guys have any other questions you'd like answering.
Okay, perfect. David, do you want to start answering a question or shall I start?
I can maybe answer this question just on the reason why we've gone for the fund distribution model in Saudi and not the present strategies, which of course makes a lot of sense. So the idea of this fractional business model or framework doesn't yet exist in Saudi, where we're also in operation, but we're working very, very closely with all the relevant parties there, the regulators, to try and bring that to the market. And once we do so, we're very sure that we'll be able to replicate what we've done in Dubai over there to keep giving you sort of as broad an investor opportunity base as possible.
Perfect, thank you. I'm going to answer one question. So I've received a question. Let me find where it's gone. Oh, I've lost it now, guys. Okay, so I have the question here, which is how can I get my stake back if I decide to sell and no one buys? When we open up we have an option twice a year for you to liquidate your stock. So the way that it happens is you've got two ways to exit. The first one is that after a year of the property's ownership, we offer it up after we've gotten the valuation in two different time periods for you guys to sell. And we'll say, like, this is the new valuation of the property. Do you wish to sell? If over 50% of the shareholders, not the people, the shareholders, depending on the percentage of shares that you own, decide to sell, we put the property up for sale. If majority have decided not to sell, you can then go into the second option, which is you can liquidate only your shares. And by doing so, you can choose the amount that you would like to put it up for. So let's say that the property is appreciated by 20%, but you want to sell your shares and you want it to be enticing for people to choose yours who are on the portal other than someone else's. You might decide to sell with only a 15% appreciation. So you're dropping your percentage by 5% to make it more appealing for anybody on the portal to pick up those shares. It also gives people the opportunity who may have missed out on your option because it funded really, really fast or they weren't on the platform at the time to then pick up those shares because they're picking them up 5% cheaper than where the market is for it. And then they can hold on to it until the next vote comes along as well. I hope I answered your question well. Thank you, Ali.
I can maybe take a couple here. I think there was a question on the possibility of getting this presentation sent to the attendees. I should have mentioned it earlier, perhaps, that this session is being recorded and will be put, I think, on YouTube or a link sent to you via email. So you guys will have access to all of this once the webinar ends. Just another one here. What is the high season for high dividends? So this is a difficult question to answer because the dividend distributions tend to vary somewhat, but in large parts, our focus is on providing stable income for our income generating properties. So if you have a look at your portfolio and you can see the rental income you receive every month, assuming you're buying no more properties, it should stay very static and even uptick as we start to increase the rent upon contract renewal. So there is no typical high season for dividends. I would say one thing that we have offered, and we continue to offer holiday homes as part of our sort of opportunities presented on the platform. And those are typically more seasonal. So it's as you'd expect, sort of low season or lower season in the summer months. And then in the winter months here in Dubai, when the weather's sort of at its peak, that's when income tends to uptick. So I hope that answered your question.
Thanks, David. On the back of what you said, I just want to touch base on Sharif Ibrahim's question, which was thank you for the clear presentation. You're welcome. Thank you for the compliment. Are you planning to move to hotel, short stay rents, or commercial? So as David mentioned in the previous answer to his, that we are able to do short term. What we do is when we look at a particular property, we'll be looking at it in terms of long term and short term as well. Sometimes short term rents are more appealing to us, and that's why we take them on. Additionally, when we're looking at fix and leasing, we're also looking at the same option. We look at it if we renovate it, would we get a better short term rent? In terms of occupancy as well as a long-term rent. Some of the people who work in acquisitions have had history, like have had experience working in short term, and others have had experience with long term. So the diversity within our hire also further supports that. Unfortunately, though, for hotel and commercial, we're not able to touch base on it yet because we have our regulation and our licensing that prevents us from doing so. If anything changes in the future, you'll be one of our first investors that we let know. Thank you.
Cool. I can maybe take a couple more. There's one question here from Dale on if we're noticing an increase in fees on both the rental side and the sales side, that will impact overall net returns. So one of the benefits of us being able to sort of successfully operate in the market here over the last 4 or 5 years is that we've been able to build up very, very strong relationships with third parties that we rely on for this sort of stuff, for managing, leasing the properties, and for facilitating an exit. So brokerage firms. So because we managed to build up this very solid relationship, if anything, we're seeing a reduction in fees due to the ability to be able to negotiate with economies of scale, the fact that our portfolio is growing so quickly and so large. So we're not seeing a negative impact on returns as a result of fees. If anything, it's the other way around.
Thank you. David, I'm going to jump in for a question that I have from Anonymous. Anonymous has asked, is there any particular reason why you have only 2 exit periods and not maybe a live exchange where we can trade shares freely among each other? That is a wonderful suggestion. Thank you so much for it. I believe the team has looked at it before. As David mentioned, we have third-party people that we work with. We try to keep it so that we can have those valuations happen twice a year. And we have agents that are area experts and so forth working on it. What we don't want to do is we don't want to be flooding our portal too much with a variety of options. We want to try and make it so that the times that we put these properties on for sale is the time that we're going to get the best traction. So the times that we choose is before the summer period and after the summer period. If we were to have it online over times where we know we're not going to get as much traction, where people are spending less historically, it could potentially reduce the dividends paying out to our investors. Thank you.
Maybe I can just follow on that because I know liquidity is a very important subject for everyone. And I recognize that we only open this sort of early liquidity event twice a year at the moment. Of course, more frequent liquidity events would be beneficial for investors. So we are working extremely hardly so that we can provide this for you. The way the exit window works, it's essentially a transfer of shares within the sort of SPV that holds the property, which is a very operationally intensive exercise, not just from our side, but with external parties such as the Land Department and the DIFC, in which these SPVs are sort of registered. So the process, while it's instant on your app in terms of buying and selling, there's a lot of work that goes on in the background to make sure that these shares are transferred as efficiently as possible. And when we built this platform for you, it was only really feasible to do it twice a year and give you the service that you guys needed. But of course, it's on our roadmap to really increase the frequency of these events as much as possible without sort of harming any other aspects of the platform. So it is something that we've noted and we're working very hardly on. And yeah, we've made big efforts to improve our internal processes and work very closely with the Land Department and the DIFC to improve efficiency on their side too. So that yeah, we can continue to offer you guys exactly what you've been asking for.
Perfect, thank you. I have a compliment and a question from Adil. The compliment is thank you for the presentation. You're welcome. As David mentioned, it is available on YouTube afterwards if you want to go back and revisit any of our Q&A questions as well as things that we touched on. The question is, the ratio of properties exited to properties purchased is increasing. Does Stake see challenges in selling existing properties in a more saturated market? Do you see the existing geopolitical tensions in the region affecting demand? As this is a two-part question, I'd like to try my best in answering it in a two-part then. The first part is the ratio of properties exited to the purchasing is increasing. What is happening is that a lot of our investors, because we provide the freedom for them to choose when to exit, we are having a lot more options that are coming onto the market, and a lot of the agents, a lot of the investors are seeing that after a year, 18 months, as we touched on in our presentation, finding really, really good returns, and they would like to exit sooner. So the exiting is not based upon our push towards the market. It's based upon the choices that our investors are making. We are trying to purchase as much as what is available. As more off-plan properties are coming onto the market, it does open up for us to be able to get really, really good options there. So hopefully our purchasing will increase. The second part was, does Stake see the challenge in exiting properties in a more saturated market? And do you see the geopolitical tensions in the region affecting the demand? So the market, it depends on where you're looking in terms of saturation. If you're looking at a community in which the developer has built 2,000 townhouses as the first cluster, that would be a saturated market. We would very much steer clear of that. But we have previously purchased townhouses that have make up only 300. And then the next handover that will come is a year from now. So this means that for anybody for renting, we can guarantee that we will have a rental lock-in price of a year before another option even comes onto the market that is brand new. So when we're choosing options, we're trying to make sure that we limit that saturation onto the market. And if there is a level of saturation in a particular area, we're going that way because the rents and the population is moving in that direction. Some areas having a population boom is not necessarily a bad thing, because that also drives up the rent, because what happens is people come in, snap up options. We then know where our set rent is, what we can gain for our investors, and it makes it easier for us to go in and purchase more. The existing political tensions in the region, that is a very, very interesting question. I love the fact that you've answered it. Since COVID, when COVID happened, everywhere around the world, we found that there was more people who returned home. Dubai was the exact opposite. They had more people coming to the country. Same thing in when there was Ukraine and Russia, more people entered into Dubai. What is happening now in the Middle East, we are having more people coming to Dubai. The reason is because we're able to provide stability. The government can provide a financial support to companies, to people. They haven't really increased a lot of things. They added a 9% tax for people's employments if they earn over a certain income. This is encouraging more people to come. So as more instability occurs around the world in other people's homes, what home countries, what the UAE is doing is they're making this to become more secure and more safe, more supportive. And at the end of the day, we're still always going to have some of the best hospitals in the world, some of the best education in the world, be one of the safest countries in the world. So even if there's more tension around, we're trying to create a safe haven here. And historically, in the last 5 years, they've proven to be a success with that. Thank you.
I can take a couple here maybe, because I think there's quite a few questions coming in. We don't have too long left. I just want to touch on a question here from Faiz, somewhat similar to what you answered, Amanda, but maybe I can just give a bit more light on it. It's after reviewing the performance data of our portfolio and the fact that we've funded over 400 properties since we began operations, but have only exited around 25 so far. What's the strategy for sale? So maybe I can give a bit more context to this. So we have been in operation since 2021. If you remember the slide that I pointed to sort of in the middle of the presentation, we've grown at a massive rate. So we've acquired a lot of these properties over the last year or two. And what we want to do is time the market as well as we can to deliver the best investor returns for you guys. So we feel it's too soon to act in terms of selling a property within a year. We want to hold it so that we can maximize the appreciation, which we've seen again. And as Amanda pointed out, as the market continues to grow, so too does our portfolio. So yeah, we plan on exiting a lot of properties over the coming months and years. And it really is a timing point from our side, because we want to give you the best returns as possible. And selling too early would sort of would limit that. So that's sort of our strategy for it. We actively work with all of our broker partners in regards to testing the market, testing the waters for buyers as to whether or not we can sell these properties above their current valuation. So yeah, do expect to see a lot more sales coming up and a lot more opportunities for you guys to vote. So yeah, I hope that helped answer it.
Thanks, David. And I assure you're probably going to be having a chuckle that I'm taking next an Abu Dhabi question. Arvid, I love Abu Dhabi. Thank you so much for your question, which is, do you plan to venture into the Abu Dhabi market anytime soon? Um, we have regulations and rules in which are given to us by DUBSA as well as the DIFC that we have to hold in regulation agreements for. Very fortunately, we have opened up in Dubai. We've also opened up in Saudi Arabia. We will be making an announcement quite soon about another opportunity that we'll be offering to you guys as investors. But unfortunately, Abu Dhabi is not on the cards yet, though we are trying. So when that does happen, you'll be one of the first people to know about that. And I will be very excited for it as well. Thank you for your question. David, do you want to take one or do you want me to take another quick one?
Yeah, I can go through. I think there's a very blunt question here. At what point do you think properties will stop appreciating in value? Which of course we don't necessarily know the answer to. I think everyone has certain opinions on the Dubai market and its growth trajectory. But what we can say is that we're laser focused on only providing the best opportunities to you guys on our platform. So we want to present to you the opportunities that we feel have the highest individual growth potential as well. So we can't say for sure. We don't have a crystal ball when the market will cool off a bit. But what we can do from our side is make sure that our offerings and our portfolio is resilient as possible, and that comes from asset selection. And we really have the best team in town when it comes to that. Do you want to take one, Amanda, or maybe I can keep going?
I'm trying to find one. um,
I I can maybe just because I
yeah.
think it's actually a theme of the questions about the market, a potential correction, a potential bubble. It just sort of it follows on from my previous response. The market, as with any asset class, does go up and down over time. Fortunately, the Dubai market has seemed to only go up and up over the last few years. But again, our strategy is to acquire the most attractive and the most solid opportunities, so that we are somewhat resilient to any market dips. But of course, it's important to recognize that even if the market does go down, real estate has always been and will always continue to be the solid investment option, and the most resilient through tough times. So what we can do from our end is not control the market, which of course we can't, but we can control the properties that we present to you guys, and we can do our best to make sure that they're the most resilient opportunities we can find.
Thank you. We're just going to start wrapping it up. So I'm just looking at the final questions to see if there's one that I can touch base that can answer a few of your other questions. So just quickly, I've seen a few of you have mentioned that is there opportunity to open up in areas like the US, the Egypt market, UK. Again, as I mentioned before, unfortunately, we are bound to regulations within particular countries. We are always looking at these as an option because it is appealing. We understand the appeal that these markets might have. We are constantly trying. As soon as we do get a inkling for this, we will let you know. Thank you. David, is there any final one that you would like to discuss?
I can maybe go through them, but I think there are again some questions regarding sort of account opening and the process for that. So maybe I can just refer you to reach out to us after the webinar, and we'll do our best to help you with those sort of particular questions. And again, the stake is open to anyone from anywhere in the world. So you don't have to be a Dubai resident, so don't need to worry about that.
Perfect. Unfortunately, we're coming towards the end of our Q&A session. Thank you so much to everybody who has attended. Again, if you have any further questions, feel free to let us know. We're happy to answer them. We appreciate the time that you've given to us for coming on to this. And thank you. Any final words, David?
No, I think you covered it all. Thanks very much for taking the time. We really do appreciate it. And if you do have any other questions or you want to get in touch, please feel free to do so. Thanks very much and enjoy the rest of your day, everyone.
Perfect. Thank you guys. Bye.